Financial wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Fronti.
Happy Thanksgiving from Don Getling, Gino Fronti, and the Don and Gino Real Estate and Finance Show. Feeling fat and happy.
Yeah.
Very thankful. Thankful for you as our friends. Thankful to be able to do our radio show now for almost 6 years and still counting.
Yeah, and I actually learned something new about Thanksgiving that I didn't get to implement this year, but I did hear the theory. So next year, it's happening for sure. It's called Fried Fridays. You fry all your leftovers on Friday. That sounds awesome. So
Gino the foodie is going, yay.
So fried stuffing, fried whatever. Sounds like a great idea to me.
Just put it in a basket and just drop it in the fryer.
Why not? So I'm
everything's
sure the kids,
good fried.
Fried Oreos, fried Twinkies. Let's do it.
You don't even have to live in the South. I just got back from New Orleans.
You just got back.
Yeah, everything's fried there, but it's good.
Yeah.
But I'm very thankful for a lot of things. Thankful for my partnership with Gino, and thankful for our incredible crew here at Skyline Home Loans. Everybody here is just beautiful people, and we really care about you, and we really care about the job we do. And I'm very thankful for that.
Super thankful. And, sometimes we get emotional on your behalf to make sure that you're protected and make sure that you get what we promised you. And it takes a lot of work to make these home loans happen today. Mm-hmm. It's not, I talked to somebody this morning and they're like, this is the easiest of the last 3 loans I've done. And I'm like, okay, well, neither one of those were either better or worse. They just went to different investors. One was jumbo, one was not jumbo, one was this. They're just complicated. And you don't live your life like Fannie Mae and Freddie Mac want you to. That's the bottom line.
Yep. So what are you thankful for, Mr. John Gonzalez at Key Partners Insurance?
Like you guys, we're thankful for all of our clients. We have great relationships with them. We're lucky to have them. We try to bring them value.
Actually, I don't agree with the luck. I just said that in one of my presentations. Like, I asked everybody if they feel lucky. And they're like, yeah, I feel lucky. I'm like, not us here at Skyline. We actually have the ability, the knowledge, the tools, support, and the desire to make sure our clients get the right financing. So we don't need luck. How about that?
There you go.
But I know you feel fortunate to have great clients.
Fortunate. That's probably a better way to put it. So and actually, like you guys, our partnerships. Skyline brings us great value. We enjoy working with your guys' clients as well. We're fortunate to have them. And I really, me personally, I'm blessed to be in a situation in an industry and a setup that I really like. And it took a long time to get to here. And I feel really good about it going forward. And so,
well, you can tell that you're in a great place, you and your team, John, because we've known you for a lot of years as you were growing and developing your business and finding your way to what works best for your clients and you. Mm-hmm. You can see how comfortable and confident and happy you are where you're at. Same as us. Yeah, we had to do the same thing. It took Gino and I 8 years to build this.
Yeah, and it takes a lot of fact finding and mistakes and learning, and nobody's infallible, and sometimes the industry beats you down a little bit. We have an industry that's gone through the largest regulatory change in history, pretty much.
I don't know what you're talking about. We've had no changes in our industry.
Right. So I think your industry is a little more stable. Correct me if I'm wrong.
It's definitely stable in terms of regulations and things of that matter. Obviously, carriers' appetites change, and like auto insurance is going crazy right now just because no carrier can make money at it. And so, if the carriers can't make money, then they increase rates. And so,
oh, I didn't know that.
Yeah, because litigation is so high, settlements are high. What's the story there?
Based off my communications with reps, here's what I think it is. It's a handful of things. One is bumpers that used to be $500 and $600 now have sensors and all of these things built into them, and they're built into the car.
Not a chunk of steel. That makes sense.
So small repairs are now more expensive.
A lot more expensive, yeah.
Labor is up. Frequency of losses is flat. So now you have a more expensive piece of material and a higher cost of labor to repair it, and the same amount of frequency. But the one thing that people overlook is one of the revenue streams of an insurance company is taking your premium and investing it within certain guidelines and earning a return on it, right?
They can't get any return now.
For years. So think of how many years you've had low interest rates. Well, that's great for the mortgage industry. That's a revenue stream that insurance carriers have lost. And so you have increasing cost, increasing labor. the same frequency of losses, and
But
no
loss of income, really.
And no return.
and no return. All of those things combined, I mean, carriers across the board have taken rate increases
See,
with auto.
I love that kind of insight because those are things that we don't talk about. Insurance is the why, right? And everybody would love to say that's because they're greedy or this and that, but you're talking about the industry as a whole. That's something that they're
Right.
impacted with, and if you think back, yeah, they used to, get returns of 6, 7, 8, 9%. And I know for the last decade, people have been getting the returns of 1 to 2% if they wanted to be somewhere relatively safe.
Correct. And so multiply that by billions and billions of dollars.
Yeah.
Because that's
Yeah, it makes a big difference,
it's
obviously.
huge.
Yeah,
It
yeah.
really is.
So even if they wanted a return, now they had to take undue risk and maybe lost some of those returns because they were trying to still get 7%.
Well, no, they can't.
Right.
They're very
Heavily
restricted.
regulated.
Correct. So
It limits their ability to even get
100%,
aggressive.
100%.
Because it's everybody else's money. It's not really their money, per
Right.
se.
And at the end of the day, they have to make money. I mean,
Yeah.
they have to be profitable to continue. Otherwise, they pull out. Think of all the home carriers years ago.
You
that
have to
pulled
be
out of
profitable. I know when I
California.
owned a bar, I told all my friends, I cannot give you free beer every day. I will not last very long.
Right.
If you want me here, I can't give you free beer. You have to buy some once in a while.
Yeah, I hear that. So that's an interesting insight into auto insurance, and a lot of people did pull out of Santa Clarita because we have fires so often.
Correct. So,
So how are you helping your? Because we talked about it earlier about that you have flexibility to go to multiple carriers. I know
Correct.
it's got to be invaluable right now.
yes, it's huge. It's huge. And one thing that's nice that helps in certain situations is the way carriers have structured their home policies. They're much now more on an a la carte basis, where they all have two different things. They have you have a base policy, and then you have a package of endorsements. And I'm not trying to get into too much industry speak, but endorsements are either additions or subtractions of coverage from the base policy. And so now all the carriers have a good, better, best offering, which is great. And then you can actually go in and kind of a la carte make your own version of their good, better. And so that's
Depending on what's important to you.
what's important, and like where you're at price wise,
Income-wise,
do
all
we
that
need to
stuff.
be at a certain premium in order for
For example, my golf clubs are not even worth the deductible, so having golf club coverage or personal property coverage is very low on my totem pole.
correct? Yeah, you wouldn't need the golf club personal.
He wouldn't even know if they were gone. By the time he figured out they were gone, they'd be obsolete golf clubs.
They're obsolete now.
So in that regards, the carriers have given us a lot of flexibility to kind of custom make something that really fits for someone. And then we talked earlier about bundling, and you talked about me being comfortable, and I really think, as I thought about it during the break, I was with Skyline for a long time, probably close to 10 years, and I was molded in the, okay, this situation goes here, and this situation goes there, and this price works better here, and I didn't have that back then on the insurance side, and getting that now, that's really, one of my mentors in the industry said the independent model is when you're a kid, they give you a toy, and there's different shapes, and you find the right shape, and you put it in that size hole, and that's really all we do now is...
That's a good analogy. I like that.
Yeah, your situation is the round circle. We put the round, ball through the round circle, and that's all we do is try to put people together with the right fit.
So since you're so good at finding the right, putting the round peg in the round hole for your clients, why don't you give us your information? Because a lot of you out there, I'm sure, should, rethink your insurance, make sure you're covered right, and see what other options are available, especially someone like John Gonzalez with Key Partners Insurance. He can find out if maybe there's a different carrier that can handle it different or restructure it or umbrella it or bundle it or a la carte it.
Or maybe you're in good shape. And,
Right.
and just hearing that from someone else other than the person that you've dealt with, has value too. And
I just talked to one of our financial partners. He's a financial planner. He goes, but I don't do mortgages, John. Look at all my stuff. I do this for people all the time.
We
I
talked
let
about it
them know.
yesterday, yeah.
And he goes, and I go, dude, you're in better shape than me. He
Yeah.
goes, that's what I wanted to hear.
Right.
Okay, so I don't need to do anything. He goes,
Right.
because I'm going to review this like I do my clients on a regular basis. So
And that's
how
our
do they
option
get a
too.
hold of you, John?
So our office is off Newhall Ranch on the 5 freeway. Our phone number is 661-235-5885. We're on Facebook. We're on Twitter. We're on LinkedIn.
Key Partners Insurance, right?
KeyPartnersINS.com is our website.
That's about it.
I
Every
think
way
that's
to
all
get a
the
hold of
way-
you. Yeah.
that's a lot of ways.
Yeah. Well, just reach out to John Gonzalez. You can tell he's a good dude, and that's who we always want, is to work with a friend that you know has your back. And we dig on you, John. I think you're
Well,
just a
thank you.
good
And
dude.
thank you guys again for everything. We've really enjoyed working with you guys. And,
Just don't play golf with him for money.
No.
Try
Try to get lessons.
Yeah, exactly. He gave me lessons. All right. Well, thanks for joining us,
Thank you
John.
guys. I really appreciate you.
And thanks
having
for
me.
being a good friend. We're very thankful for you.
I'm thankful for you guys as well. So.
All right, buddy. And keep doing a great job, and we'll have you back on the show.
Awesome.
All
Anytime.
right.
Thank you.
John Gonzalez, Key
Have a great
Partners
weekend.
Insurance. Stick around. We got more coming up.
Thank you, guys.